Good morning, everybody, and this is your S&P 500 day trade setups for today. So, pretty interesting structure that has formed at the moment. So we did get above the moving averages early in the week. We're looking for a retest of one of these tails here. That has materialized. We have failed that. The crossover has happened some time ago, but you're looking for rejections underneath it, and then we got this rejection bar yesterday off it on the 8 hour, and we are on a tear of note. We are a neckline of a big head and shoulders. Just pay attention to that. There's your left shoulder, big head, right shoulder, and we are also in an area of strong support. So I'd be very reluctant to be jumping in short right where we are now. Also a little bit of diversions in play right now, not completed yet, but it's definitely there. And we do have non-farm payrolls this afternoon, which could swing this thing in any other direction. So looking at what happened yesterday, we fell short of this level here, which is what I would have thought we would. If we were going to reject something, that would have been the most logical area. But let's just get to the hour, because that is the critical one. You can see there's the level. Then we had a whole host of levels that we were looking at, and I can pretty much guarantee you there would have been people short here. They would have been looking at shorts here. It's below the moving averages, looking at that short, going, right, let's get in early, put a short in here with a tight stop loss, and this little squirt above it just triggered all those stops. And if you look to the left, what did the bears do? They looked for a different level, which most of us would have missed. And to be honest, I missed this one here, which is the one that they played. And that's 40.017. So most of the people would have been at 4,000. But again, the bears just taking you out of the market. Anyway, looking at the 15 minutes, you can see there's 4,000 pullback. You'd be forgiven to see, okay, that's a pullback. I've got a crossover. I've got a pin bar on level here. I'm long, and I have a stop here. Starts get going, enough for you to walk away from your trading station, and then plummets. So pretty interesting little lesson here. So what you want to do is why I always say, when you've got these big levels, you want a big break above it and a big pullback onto it before you verify that that level is safe, because this here is exactly what the algorithms are looking to do. Because the more they trigger stops, so they're triggering, with people are buying, and you probably find you had longs up here, or you had shorts sitting just here, and then that triggered the short stops, and that just started the downward slide. So they're always looking to pull you into the market in the opposite direction of what they're going. So it's not a friendly game that we're playing. Anyway, above and below the moving averages as well, which would have just been really confusing. I didn't play this yesterday. Wasn't paying attention to it at all. But for me at the moment, non-farm payrolls, this here is not something that I want to be jumping in short just yet. So if you did get this short yesterday, well done. It would have been a very decent payday, to be honest. Even if you'd got, if you'd watched that and then had a look to the left and then said, well, this is triggering further. I mean, there's another little rejection there, which is giving you 100-point stop loss for almost 1,000 points at the moment. Yeah, just on 1,000 points. So 10-to-1 trade. Fairly decent setup. So for me at the moment, the best, what did I say the best, but the closest area to be short right now, I'm just going to put two levels in here, because there's quite a bit in between there, but the closest area to being short is going to be around 39.21 and 39.42. That is kind of what I'd be looking at. Now, just a little bit of advice here. With non-farm payrolls coming, this could be a indication that somebody knows, well, somebody always knows, what non-farm payrolls is and has jumped in early. Or alternatively, it could be somebody that knows and that has driven it down to get a better price for the bounce. So just keep that in the back of your mind. The Feds have been opening their mouth all week, which has been driving this all over the place. So just be very careful, because I don't trust what I see, and you've been manipulated by the federal government at the moment, or the Federal Reserve, should we say, and their manipulation is now, a lot of them have got their own private interests in the market as well, so just be very careful. I wouldn't be in on non-farm payrolls. If you are holding short at the moment, pay attention to your structure coming up when we're right over here. So this is at 3888 area. This is a big area of structure, and it could drop a little bit further. But my advice to you is, as soon as you start seeing any signs of buyers coming in, dump everything and go buy yourself a bottle of whiskey, because that was a pretty decent trade. For me at the moment, if we do come back into these areas, I'd be looking at it, and there's another area further higher up here at 39.72 that I'd be interested in. But right now, I'm just going to delete the noise. We are still all over the place, and we also have a fairly strong trend line that hasn't been tested in this zone as well, and you can see we're between the moving averages on the weekly, so I'm very reluctant just to jump in just yet. Anyway, that's my confused outlook for this morning. Hope it does help somebody stay sane and solvent, but be very careful what you see at the moment. I do suspect we're probably going to bounce a bit, and then see what non-farm payrolls says. If non-farm payrolls is positive, then expect us to end up right at the top of yesterday's price. So basically 2% down, 2% up. Anyway, guys, I'm out of this. I'm not even bothering with this. I will pick this up next week. I hope you have a good weekend, and we'll catch up with you on Monday. Cheers for you.